Cash cattle, absolute wildfire this week. Good afternoon, everyone. Eric Relph with Comstock Investments, taking over the Comstock channel from Marlon Bowling while he's out on vacation. I just couldn't see Matthew having all the fun this week, so I decided I'd take over for a day here to end the week. Talk about a couple of the key things that went on, primarily focusing on the cattle market because that was the highlight of the week, but we'll take a look at a couple of charts in addition to that as well. Cash cattle, absolute wildfire this week. We saw a blow off in the cash last week that we thought would be difficult to keep pace with this week, and then this week comes out. By the time we get to the heavy trade on Thursday, we're superseding the gains that we had last week, and we actually saw live cattle trade as high as 230 in Kansas, as high as 243 in Iowa and Nebraska just about an hour ago. That number could be superseded by the time this recording is out to you all. I don't know what the late Friday stuff will look like, but recording this at about 2:30 in the afternoon, haven't seen the official 2 p.m. reporting deadline. Obviously, that'll come out a little bit later. But the numbers that we're seeing right now are just astronomical. 380 dressed. I've had clients selling cattle to be picked up in July. The cattle won't even be ready until July at 370. With that kind of deferral, it's pretty impressive numbers. We saw 375, 376, then up to 380 by late yesterday, and then a little bit more of the same today. We have seen times in years gone by when the blow off only occurs in the cash market. Hopefully that's not going to be the case this time around, but for those that are out there searching for basis, it's going to be a dream come true. Those looking for higher prices or the board to play a little catch up as an opportunity to extend hedges, going to be a little bit difficult if that ends up being the case. But taking a look at the charts here, starting first with the cattle continuation chart, I wanted to start here just because it illustrates the June gapping open each of the last two sessions. That first gap actually jumped the previous contract high that was posted on May 14th. So orders sitting right there at that high to sell actually got jumped right off the open. We've seen just this parabolic move in the June live cattle over the last three sessions. Now, a lot of times a technical blow off top on a chart will happen in a 3-day increment. I don't know what's going to stop this thing at this point. If the cash slows down immensely, if the equities take a downturn, if we get some screwworm headline or they open the border to Mexico, any of those kinds of things could definitely turn it lower. But throughout nearly the entirety of this rally, any negative news was absorbed. And I'm going to zoom out to look at this chart here, which is the continuation chart on a monthly basis for live cattle. This low here is your COVID low in April of 2020. And you can see since then, it's just been a methodical march higher, almost on a perfect 45-degree angle. And now we have this blow off that has taken out what would be some form of trendline resistance. Again, those kind of parabolic moves are often indicative of some type of blow off top. So I am cautiously optimistic here. It is going to require, as I've stated before in these videos, I believe it's going to require a lower weekly close combined with lower cash cattle before we can have any kind of confirmation that maybe a top is in. At that point, it would just be still a little speculative. But I think the combination of those two is what it's going to take to say, okay, maybe that was it. This cattle market has been hugely resilient throughout all of it. We did see some strength in the feeder cattle today as well. August feeders closing up $1, just a little above the index levels right now that we're seeing in both the CME and real-time index. And that was also a new contract high today after gapping open each of the last 2 days as well. The feeder cattle did dip back and trade into negative territory at times today, but we have not closed the gap that we left at yesterday's open, and that wouldn't fill until we get down to 304.37, currently at 310.15. Some of that strength that we saw today was definitely impacted by outside influence. We saw some serious strength in the equity markets. Dow Jones futures traded over 500 points higher at times today, finishing up here this afternoon at about 450 points higher. The NASDAQ up 230, S&P up 66, just really nice gains in the equities today. And there's a little bit of optimism about a trade deal with China. There's a little bit of optimism that maybe we'll see some positive biofuel announcement from the government sometime sooner than later. So far, we haven't gotten anything to help us out on that front, but I guess hope is not all lost, and traders are showing that today. The grain market saw some gains as a result of that in conjunction with a couple of other things, but some profit taking in the corn spreads actually pushed the July up 3, while the December was only up a penny, but we finished out the July contract at 442.5 for the week. Still a lower finish, but we were able to hold within a congestive range at the bottom here, and maybe we've carved out some kind of a low, at least for the short term. December looks quite a bit better. We did drop down early in the week on Tuesday, made a new low for the move that took out these prior lows, got down to 434 and a quarter before rallying up to finish the week at 449 and a quarter. So 15-cent rally off the low just in 4 days. Pretty good for the new crop, considering the fact that it was lagging a little bit behind some of the other grain contracts this week. July soybeans finished the week up 5.5. July soybeans closed the day up 5.5 at 1057 and a quarter. It was a higher close for the week. We did sustain trade above the 100-day moving average. Really nice stuff to technically in the July soybeans. That could give us the impetus for some technical follow through next week. But I think a lot of that's going to be dependent on whether or not we get any more positive rhetoric surrounding the biofuel situation. And soybean oil is going to have to come a little bit more in order for that to happen. We did have an 85-cent gain today in the July soybean oil, but still not a great looking chart there. We're holding where we needed to on the bottom side after probing through it this week, but it feels like without some news, we're going to struggle to get any follow through to the top side. Obviously, we'll be awaiting that. The other thing that could be a positive influence is the wheat. We traded sharply higher today, particularly spring wheat posting double-digit gains. The July contract, a really nice looking chart here over the last several weeks. Winter wheat finally starting to come around with it. The winter wheat growing regions are going to start struggling with too wet conditions as we are nearing harvest. Most of your SRW and HRW country will be in harvest mode within the next month, a lot of HRW within the next week or two. And as you get closer to harvest, these rainfalls definitely have a negative impact. We'll see how the market treats that moving forward as well. The energy sector was really quiet this morning, but had a really nice finish to the day. Natural gas up a dime, crude oil up $1.30 in the July WTI at 64.67. That did clear out a previous high that we needed to close above at 64.19. Got that done. The next target should be the 100-day moving average at 65.62. Products played along throughout the day as well, coming up off of negative territory early to finish in the green, at least a few cents in both RBOB gasoline and heating oil. Maybe one of the biggest stories of the week has been the white metals, the silver, platinum, making huge parabolic moves this week. 2 gigantic days higher in the silver during this week's trade, coming up off of the 100-day moving average that had been support. You have $1.70 plus move first day, then you trade sideways for a couple of days before getting another explosive day higher. These are heavy spec markets, and when they're doing well, that definitely props up the overall commodity sector. You have things like the CRB index, the Bloomberg Commodity Index, they're heavily weighted into the metals and energy. So when you see positivity in those markets, it does draw some attention to commodities as a whole. Then our ag commodities can be beneficiaries as well. The soft markets were fairly quiet with the exception of a pretty nice move throughout the week in the coffee that hit a high and failed miserably today. We were trading coffee up about $15 before finishing $1.70 lower on the day. A pretty amazing spike up and failure there. Not a good technical look for the coffee. We'll see how traders want to treat it to start next week, but I had cautioned that there are many times when soft markets will see profit taking on Fridays. I didn't think they would strip $16, $17 out of the coffee, but that's what happened today. And lastly, going to take a look at the hogs. Technically, hogs have been really strong. June has been lagging a little bit compared to the July and August specifically, but today did have a topside breakout, closed above 102.5. That's the highest close we've seen in the June contract since clear back in February. July continued its march higher, finished the day up 230 at 107.10. That's a new high close for the contract. Definitely positive momentum in that chart exists still, even after rallying so sharply off of that April 9th low of 87.47. Whether or not that uncovers enough hedge pressure to push the market back lower next week remains to be seen. But right now, the market looks really strong, both on the cash side and from a technical standpoint. August continuing to make new contract highs at 109.40, closing the day at 109.40, up 235, and finishing a very strong week for the lean hog futures. So that's how we wrapped up the week. If you guys have any questions, feel free to reach out. Otherwise, we will see you back here on the Comstock channel next week when Marlon gets back from vacation. Have a good weekend, everyone.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.